Good morning, this is Steve O'Hare from Signal Centre. Today is Wednesday, the 29th of September 2021, and we're going to take a look at Commodity Corner. We're going to take a look at the crude oil, WTI and Brent, and also take a look at natural gas. We'll start with the higher time frames, then drill down. So over the last week, we've seen another rally in the crude oil sector. WTI crude oil topped out this week at 76.47 and has retraced slightly from there. The barrier between 76.35 and 76.80 has held. So we are looking at obviously supply concerns is the main talking point. However, we've also seen sentiment erode slightly over the last couple of days amid the slide in risk sentiment, sharp losses in equities, and also a stronger US dollar, which impacts negatively on price action. So this is the weekly chart. Let's drill down to the daily chart, and we can see that yesterday price action formed what looks like a shooting star, maybe not a great shooting star, because we saw price action really move aggressively lower, but the tail is the same size as the body, so not a classic one. However, overnight we have seen a little bit of risk coming into the market again, and price action has moved higher on the back of that. On the 4-hour chart, we've formed a bullish outside candle. This forms in 5 minutes. It's 9:55 at the moment, so at 10 o'clock that will have formed, and that's a bullish outside candle, and that is really positive for short-term price action. We have oil inventories this afternoon. Yesterday, API data recorded an inventory build of 4.2 million barrels compared with expectations of a further draw. This also damped the confidence in oil markets, so we saw a bit of a sell-off on the back of that. Price action on the long-term charts on Brent crude looks pretty similar, and we can see that the reaction from the high just below $80 has been quite aggressive. Decent move lower, got down to 76.60, and we've bounced higher. We're about 110 points higher now on Brent, really trying to get above the 77.80. We managed to get back above there, then I expect price action to move strongly higher. Again, oil inventories will have a say in that. Natural gas, really want to look at the longer term chart, the weekly chart. We can see that price action has stalled at the 38.2% Fibonacci retracement level, which is common a level for price action to stall. That's just below, well, that's at 640, and we stalled here, forming a high around about 635. So on the daily chart, yesterday you can see this indecision. It's a doji candle where prices opened and closed at the same level. We saw a fantastic spike higher, a sort of like 40-cent move higher, and price action then moving lower, and then today we've seen indecision really creeping into that natural gas market. So price action over the last day or so has been a bit sideways, but forming a positive candle on this more recent 4-hour chart. So that's it from the commodities. I hope that's been informative, and look forward to joining you again next week.